let's also decode this further. Get in Feroze Azeez, Joint CEO, Anand Rathi Wealth, to explain all of this in terms of what to be expecting in trade today as well going forward. And Feroze, first things first, a very good afternoon. Just wanted to kick off the conversation by starting the chat with the curious case of CAS as well, and the way that you've seen that really unfold for the markets. The last few minutes, to say the least, are quite volatile as well. How are you looking at that, and do you also see that settling in eventually as the market also gets used to it?
Good afternoon, Shreyanshi. I'm very, very happy and positive about it. Because what I, as a derivative treasury person for the last couple of decades, I've been mentioning this, maybe in your channel, I would have mentioned to Alex a couple of times. The derivative cash market had become the derivative of derivative. Derivative derives its word because the value of a derivative depends on the cash market, is why it's called derivative. Unfortunately, हो क्या रहा था कि cash market was deriving a price from derivative. So that's why you see an attempt to make sure that the manipulation reduces. Now, is this the first attempt? I'm very happy that the regulator is doing an attempt. When you see to naked eye several transactions which were brushed aside saying it was a fat finger, I read that, okay, itna loss kar diya, it was a fat finger, it was an erroneous trade. Those were not erroneous trades. Those were intentional losses created in the cash market so that a person can make 5 times more the money in the derivative market. If I want to lose 100 crores in cash market, and if I build a position such that I make 500 crores in the derivative market, that's what was happening. And we were just calling it fat finger and saying that koi dealer ne by mistake apna loss kar liya. Nahi, loss profit ke liye kiya tha. So is the regulator agile, vigilant, is doing an attempt? In the first 3 days, will you get super normal output of a new attempt, an innovative attempt? The answer is no. I'm very happy with the intent, and I don't think people are being as positive as you should be, because intent is more important than the 2-3 days of its efficiency and the market. And you are seeing arbitrage funds giving supernormal return for 2-3 days, and people are making reel after reels, and the return aa gayi, wo wapas bhi chali jayegi jab futures and cash market have to converge on an expiry.
No, absolutely, and that intent is right. Some bit of teething pains that you're seeing right now come in with the efficiency. That's the word coming in there. But, just also wanted to try and get a sense of what you think about what's been happening with oil prices, and whether or not market is actually, do you think that market has completely sort of digested that as well? It's growing a little more, resilient in terms of those oil price fluctuations. That bit of screen is not being monitored closely enough, or do you think that it's just some of those range bound levels, and once it's big, once it breaks out of this range, you'll see that story completely change and unfold in the ways that we've seen it unfold previously for oil prices?
The oil prices are one of the easier things to predict. And those have to be predicted on the long variable, which is the right variable. People predict where will oil go. It doesn't matter to a country where oil will go. What will be the mean price for the financial year? What will be the median price for the financial year? That's the projection people need to do, because you're not going to buy all the oil you need at the peak value or the trough value. A country is going to import oil, which is our largest import, is oil, right? So I'm going to be importing it in a staggered fashion. So what's the mean? What is the median? Currently, the mean is 91. And our expectation is that the mean will be 85 for this financial year. And this I had said when oil had touched 120, because oil is not a scarce commodity. If there is a supply shock, the supply shock always corrects itself. If you look at in the last 50 years, there have been 14 times oil rose 50%. It came back down 12 times out of 14 times. Every time there is a supply shock, oil comes back down. If it rose 50%, it comes back down 29%. Okay, only 2 times it has not come back down within a year is when the global financial crisis के बाद की जो demand recovery थी, या COVID के बाद की demand recovery थी. These were the only 2 reasons why oil didn't come back, because that was genuine demand which rose prices, not supply shocks. So supply shocks can't keep oil higher. This is no rocket science. And if you look at the futures market of oil, when it was peak, it was very evident the peak was behind. And I had said that on the peak day of 124. that you will not see further peaks. So I think oil is rightly at that place. The mean level
Yes.
of oil for the year is going to be 85, in my judgment.
All right, then. So need to be asking different questions then when it comes to oil prices. Thank you so much, Feroze, for taking time out and joining us this afternoon.